What if I told you everything you thought you knew about trading is already outdated? In 2025, markets aren't just evolving, they're being completely reprogrammed by AI, quantum tech, and lightning-fast bots. The old rules? Dead. The new game? Ruthless, fast, and data-driven. Welcome to Elite Trade Club, where today we reveal the only 2025 trading blueprint you'll ever need, the tools, the strategies, and the secrets that top investors are using right now to dominate the markets. Whether you're a beginner or a seasoned trader, this isn't just another guide, it's your survival kit in a machine-run market. Let's dive in. To thrive in today's market, traders have to understand the three massive shifts reshaping how money flows globally. First up is Tariff Man, and he's back. In 2025, political decisions are moving markets more than earnings reports themselves, and with former President Donald Trump returning to office again, a fresh wave of 10% tariffs on Chinese goods and 25% tariffs on Canadian and Mexican goods is shaking up global supply chains and adding fuel to the inflation fire. Analysts estimate these tariffs alone could spike core inflation by 0.8%, forcing the Federal Reserve to hold interest rates higher for longer. But smart traders? They're already rotating into tariff-insulated sectors like US infrastructure and domestic energy. One standout, Sterling Infrastructure, STRL, has exploded over 300% since 2024, riding the wave of reshoring momentum and lucrative federal contracts. Next, we're witnessing a major power shift. AI is everywhere. What used to be cutting edge is now pretty common. With open access models like DeepSeek R1 making advanced machine learning tools available to anyone, the playing field is leveling fast. And the impact? The once untouchables Magnificent Seven tech giants are losing their shine. Investors are pivoting towards industrials and financials, companies that aren't just selling AI, but using it to supercharge their efficiency and their margins. The numbers don't lie. The S&P 500, excluding tech, is already up 5.8% year to date, showing where the smart money is going. In 2025, it's not about who has the tech, it's about who uses it better. Here's a surprise twist though. Bonds are back. After a decade in the shadows, fixed income is suddenly in the spotlight. Both UK and US 10-year government bonds are now yielding around 4.5 to 4.6%, while TIPS, those inflation-protected securities, are delivering real returns of 2.1%, even after adjusting for inflation. Some analysts are projecting double-digit annual gains from high-duration TIPS portfolios, and while everyone's distracted by AI hype and crypto headlines, bonds are quietly staging a comeback. And the sharpest traders? They're already listening. Before we chase profits though, let's get one thing straight. You can't win if you don't survive. That's why elite traders swear by the 2% rule. Never risk more than 2% of your capital on a single trade. If you're trading with a $1,000 account, your max loss per trade is just $20. Why? Because taking 10 losses in a row won't wipe you out, it keeps you in the game long enough to catch the winners that matter. And leverage? In 2025, brokers are already clamping down, most cap leverage at 1 to 30 or lower, but the pros, they're using 10 to 1 or less, not because they have to, but because discipline beats drama. When setting stop losses, avoid the emotional traps. Don't place them where they feel right. Set them where your strategy breaks. If your trade idea is invalidated there, that's your true exit. It's logic over impulse, and that's how traders stay alive. Winning in 2025 isn't about reckless bets. It's about controlled risk with massive upside. And the top traders? They're using asymmetric strategies designed for exactly that. Alright, first up, ICT liquidity sweeps. This technique fades false breakouts right at institutional order blocks, where the big players play. By combining tools like MT4 expert advisors with AI-powered news scanning, traders can detect the fakeouts triggered by market makers and strike back with precision. Then there's volatility harvesting. When markets go quiet, like during tariff lulls, volatility contracts. That's when smart traders sell gamma, profiting from time decay in options. Some even use advanced bots from firms like Volant Trading to automate this edge. And don't sleep on the TIPS carry trade. With inflation-linked bonds offering 2.1% real returns, traders hold TIPS while riding inflation shocks. Platforms like BlackRock's Aladdin do the heavy lifting, optimizing positions so you capture yield and stay hedged in one move. You don't need a $1 million account to trade like a pro in 2025. Prop firm amplification has changed the game. Platforms like FTMO and MyForex funds are offering everyday traders access to six-figure capital. All you have to do is pass their evaluation. So what's working? The smartest traders are using low-frequency, high-probability ICT-based setups, aiming for consistent 5 to 10% monthly growth. No overtrading, no gambling, just calculated execution. And once they're funded, they diversify across multiple accounts, usually 3 or more. That way, they're protected from sudden rule changes, payout issues, or unexpected firm shutdowns. It's not just about getting funded, it's about staying in control. Want to think like the big players? Then it's time to copy the institutional elite. Because in 2025, smart retail traders aren't guessing. They're modeling their strategies after Wall Street giants. Jane Street dominates ETF arbitrage by exploiting tiny inefficiencies between ETFs and their underlying assets using ultra-fast C++ algorithms. Retail traders may not have that speed, but with arbitrage scanners and low-latency brokers, you can mimic the logic and ride the same wave. Renaissance Technologies, home of the legendary Medallion Fund, layers signals like an orchestra. Some bots trade mean reversion on stable ETFs. Others surf sentiment on volatile stock. Together, this blend has produced 66% annual returns pre-tax. Retail traders? You can mirror this approach using tools like TrendSpider for technicals and DeepSeek R1 for sentiment. And then there's jump trading, pioneers in quantum portfolio optimization. They're running simulations on Google's Sycamore quantum processor, compressing hours of data crunching into seconds. But here's the good news. Qiskit, an open source SDK, lets you tap into quantum strategies too, right from your laptop. Pro tip, when backtesting your strategies, always include data from 2015 to 2020. That range includes Brexit, COVID, and other black swan events, stress testing your setup against real-world chaos. In trading, brilliance fades, but consistency builds wealth. The smartest traders in 2025 follow a structured daily routine, not just gut instinct. Here's how you can do the same. Start your day scanning daily and 4-hour charts. Highlight key levels, liquidity pools, fair value gaps, FVGs, and any major tariff-related events. Watch out for gap and trap setups, especially in sectors like Mexican automotive exports, which often surge when trade policy announcements are delayed or softened. This is your golden trading window. Deploy your MT4 bots or EAs to catch high-probability ICT breakouts, but don't go fully hands-off. Be present during key events like Fed speeches or sudden geopolitical shocks. Think breaking headlines or tweets about Taiwan Strait tension. These are the moments when human judgment outshines any bot. Before you shut down, journal your trades. Ask yourself, why did price sweep that liquidity? Was my bot fast enough? How did it handle slippage? Once a week, take it a step further. Run a walk-forward analysis. This method, popularized by IG Markets' 2024 tools, help you refine your bot's performance while avoiding the trap of overfitting. To compete in 2025's markets, you need more than skill. You need the right tech stack. These tools give retail traders an edge once reserved for institutions. Start with TrendSpider, a game changer for automatically spotting chart patterns and fair value gaps, or FVGs. It accelerates your analysis and saves time, with plans ranging from $107 to $447 a month, depending on features. Then there's Trade Ideas Holly, your go-to for real-time alerts on unusual volume and options flow, critical during volatile sessions. Subscriptions run between $89 and $178 a month, and many top traders say that it pays for itself in one session. Running bots? You'll need MetaTrader 4 VPS, preferably NY4 or LD4, to ensure ultra-low latency and lightning-fast executions. These typically cost $30 to $100 per month, but the performance edge is worth every dollar. Finally, plug into DeepSeek R1, a free AI-powered sentiment scanner that tracks breaking news and ranks headlines by market relevance, perfect for those event-driven setups. There's also a freemium tier if you want to explore its full capabilities. Bottom line, this isn't just software, it's your trading edge in a high-speed battlefield. So, does this blueprint actually perform? Well, the numbers say yes. In 2024, traders applying the London Killzone breakout strategy paired with a strict 2-to-1 risk-reward saw a staggering 90% FTMO pass rate. Meanwhile, a Quant Connect backtest of a hybrid strategy called Diamond Hands 2.0, which combines 90% passive ETF holdings with 10% AI-powered swing trades, delivered a solid 19% on ETH to USD in Q2 of 2025. But success doesn't mean that you throw caution to the wind. In May of 2025, Morgan Stanley was slapped with a $5 million fine after one of their AI trading systems generated hallucinated trades. A reminder that no matter how advanced the tech, human oversight is non-negotiable. Trust your tools, but never surrender full control. Now let's break down your 5-point launch sequence to get started the right way. All right, capital allocation. Split your funds 60% core, like tips or long bonds, 30% satellite, AI quant bots, and 10% speculative, crypto via DCA. Tech setup, install MT4 with custom expert advisors, deploy a low latency VPS, and set up Telegram alert bots for tariff or macro headlines. Prop funding, pass a prop firm challenge using the classic 1% risk per trade rule, or 2% risk per trade rule if you're really risking it. Skill stack, learn Python and pandas for data analysis. Go deeper with stochastic calculus if you're diving into advanced options. Monthly audit, cut underperformers. Remove bots with less than a 40% win rate or a Sharpe ratio drop below 1.5. This isn't just theory, it's your blueprint for real-world success. The 2025 trader isn't replaced by AI, but the AI-augmented trader replaces the undisciplined. In this new era, it's not about hustle, it's about precision, smart systems, strategic capital allocation, and a constant feedback loop define who wins. You're no longer trading alone, you're trading with algorithms, data, and an edge most never unlock. Want to keep sharpening that edge? Like the video, drop a comment, and subscribe so you never miss what the average trader doesn't even know exists.